Hello and welcome to WFTV's Law Talk, your guide to understanding the law and how it impacts our community. From housing to healthcare and everything in between, we connect everyday issues to the law. I'm Jeff Harvey, the CEO of Community Legal Services, and we want to help advance the mission to make legal access for all a reality. You're watching Law Talk.
Turning complex legal jargon into everyday talk. That's WFTV's Law Talk, sponsored by Community Legal Services.
With us today, we have Miriam Mitchell, the Chief Lending Officer at Addition Financial. Miriam has been at Addition Financial for over 20 years and has held pretty much every position there is in the lending side of the institution. So welcome, Miriam.
It's great to be here. Thanks.
Thank you. So we were talking before a little bit about consumer issues and credit issues and auto loan and repossessions. And, you know, at Community Legal, one of our #1 searched issues is people getting their cars repossessed. So now getting the chance to talk with you and kind of see what's behind the bank, right? What goes on at a credit union or a bank, a lending institution? What's happened once somebody gets to the point where their car is being repossessed? What does that look like on the bank side?
Yeah, so on the bank side, typically what we are doing is we are trying to do some outreach early on when we notice that someone is making slower payments than usual. So we'll try to reach out, try to see if we can resolve any kind of financial issues that they're having. Maybe there's been a loss of employment or a death in the family or something that has impacted their financial situation to where they can no longer make the monthly payments that they were given at the time that they originated the loan. So what we'll do is we'll reach out and we'll look for opportunities to help that member actually restructure the loan. We'll look to possibly defer some payments if they need just a little bit of payment relief for a short period of time. But we really want to help the consumer at the end of the day. We don't want to repossess the vehicle. We want to make sure that the consumer is able to stay in the vehicle that they purchased originally and they're able to afford the monthly payments without causing a hardship to them.
Yeah, that makes sense. I mean, the bank can't do anything with the vehicle but try to get their money, right? I mean, so
right.
It's better to have somebody that's productive and able to help good on your investment, but also be productive themselves.
Sure, and typically if we repossess a vehicle, if that loan is $40,000 with the credit union, we're repossessing that vehicle. Once we take it and sell it at auction, we're getting a fraction of that money back. So it really doesn't benefit us or the borrower if we get to the point of repossession.
Yeah. So I recently actually found myself in a situation where I needed a car loan, and I've been with one bank for years, military background, everything else, and oddly enough found Addition Financial actually had a better terms than I would have gotten in my own bank that I've been a member of for 20-something years. So I recently became a customer. When people are looking for loans, knowing that there's always a potential that you run into challenges, what types of things should people look at in terms of like loan terms, maybe institutions?
So, you know, payment is usually the #1 driving factor for most people when they're purchasing a vehicle. So I would suggest using tools like online calculators, going out and looking at different financial institutions to see what their interest rates are. Term is a big thing that will drive payment. So, you know, you could do a term for 36 months and you may get a phenomenal interest rate, but the payment might be higher than what you're looking for. So you could stretch that out to 60 or 72 months to get a more favorable monthly payment. But I would say really just shopping the institutions, looking at what type of rates and terms they offer, and looking at any type of prepayment penalties or anything like that that could be included in that loan agreement.
Mm-hmm. So in prepayment penalties, I guess what does it look like from the bank side? Why would a bank want to offer something like that, and why would it help or hurt a borrower?
Yeah, so usually with a prepayment penalty, it's because the bank is offering something and they want to ensure that that loan doesn't pay off too early to where they aren't able to recoup the cost that they've put into actually doing that loan for the borrower. You know, credit unions typically don't require prepayment penalties. That is one of the benefits of doing your banking with a credit union. But in the event there is a prepayment penalty, you want to make sure that you're able to meet the terms that are set out in that agreement.
Mm-hmm. If somebody was looking to go get a loan for some reason, right? Outside of terms and those types of things, is there anything else they should consider?
You want to look for a reputable lender. Many times, you know, you can get these startup banks or startup finance companies. There's a lot that goes into the terms. You know, you could be looking at something where it says you're going to get a 6%, and then when you get to the table, you have a 10% interest rate. So really just doing your due diligence on the bank or the credit union that you're going to be working with, making sure that, again, are they reputable? You know, do they stand behind the products that they offer? Are they going to be there if something does happen with you financially and you need their assistance to work out that loan? So are they going to be there for you to talk to them and guide you through that process?
So you say be there for the borrower, right?
Mm-hmm.
What do you mean by be there?
I mean, are you going to be there to help them work through any type of financial situation that they may be encountering? So we mentioned, somebody loses their job, they can't afford the payment anymore. Are we going to actually be there to help walk them through how do they navigate that challenge? Many times a financial institution will sell the loan to another financial institution, and the borrower is not able to actually ever get anybody on the phone to help them when they are in some type of situation like that. So really, we are local. You can come in and you can talk to us. You can pick up the phone and call us, and we will always be there to answer and help.
We share the same thing from community legal services side, right? When people run into legal issues, assuming that they identify that they have a legal issue, it then becomes, well, I don't know who to call, or I don't know if I should call somebody or whatever. And I know that we've run into situations where, even in cases I've taken, that as soon as they call me, I'm like, no, this is how this is supposed to work, and have reached out to banks on their behalf. Sometimes I can get a hold of people, and sometimes I'm sending registered letters just to try to get things on the record, right? And so I can definitely see why that's important, especially if they're there as a partner.
Yeah. It makes a huge difference.
Yeah.
I mean, it's the difference between your home going into foreclosure or your car getting repossessed, or us being able to find a solution that allows you to keep both of those assets.
Mm-hmm. One of the things I wanted to ask you is, we're always trying to be proactive in certain areas, right? So if you're trying to think about the fact that at some point you're going to have to buy a car, or at some point you're going to want a loan, maybe for a home or some other thing, what types of things, from your perspective, do you think that our viewers might be able to think through and work towards in order to put them in a better situation to kind of have you be a partner with them?
So really, it's about managing your finances. We talk a lot about budgeting, living within your means, making sure that if you get a credit card with a $10,000 limit on it, you're not running out and immediately spending $10,000 and paying 20% interest on that credit card, or sometimes banks, it can be upwards of 30%. It's managing your monthly payments to what your actual income is. That's key, because anytime you come to get a loan, we're going to look at how much money do you make, how much debt do you have outstanding, and can you afford this new debt that you're applying for? And oftentimes the issue is people have spent too much. You take 10, 15 credit card monthly payments of $150, $200 each, that adds up. And it could be the difference between qualifying for a mortgage and not qualifying for a mortgage. The other thing is making sure that you make payments on time. Your credit is crucial when it comes to being approved for a loan. So making sure that if your payment is due on the 15th, you're making that payment on the 15th or sooner, as well as not maxing out all of your credit cards, because if you do that, it's immediately going to drive your credit score down, and that's going to hurt you when you come to us to apply for credit. So
being a local kind of community-based institution, when you're looking at credit decisions, a lot of times I think to viewers, it's a number. My number is going to say yes or no. But there have been times where people have fallen on hard times or gotten behind in payments for a few months, and some of that stuff stays on your report for a long time.
Right.
How do you all look at that stuff differently?
So if you are a member of Addition Financial Credit Union and you come to us for a loan, and maybe you've had some issues, and we see this a lot with medical debt, for example. People had a hardship, they had some type of medical issue, and now they have thousands and thousands of dollars being reported on their credit bureau, which is negatively impacting them. It's just not a no for us because of that. You had a life event situation. And so we'll sit down with those borrowers and we'll talk through what happened. And if we're still able to help them because that was a one-off and they really can afford the payment, it was just a period of time in their life where something bad happened, we will still look at making those loans. So especially if you're a member with us, because if you do your banking with Addition Financial, we want to make sure that we're there for our members. And that means the good times and the bad times.
So the math might classify somebody as a particular risk category, but the decision ultimately comes down to the relationship that you have.
Absolutely.
And not just that number.
Right,
That's
yeah.
good.
Yeah, numbers are important. Obviously, we want to make sure that we're not putting you in a vehicle that you're going to drive off the lot and you're going to be upside down in value within one day. So we want to manage those type of expectations. But yeah, when it comes to debt ratios and when it comes to credit history, there is flexibility there based on your relationship with the institution, at least for us. And we do like to work with our members that are in those situations because we want to be their trusted financial partner. And even if we can't give you the loan today, we want to sit down and provide you with some financial guidance for how you can get the loan in the future. And we have many times where members come in and we have to deny them because they just can't afford it or whatever the case may be. But they come back to us and they thank us later because we gave them tools for how to get to the yes.
So what kind of tools?
A lot of times we'll sit down and we'll review their credit with them, and we'll talk about, some of the things that are actually dragging their credit down and how they could actually fix that problem. We actually have a high school branch program where we actually bring in high school students, and they actually fully run the branch, so they really get to understand about what it looks like to manage your checking account, and what it looks like to manage payments on a loan, because they're servicing the teachers and the administrators at their schools as well as their fellow students. So we do a lot around that. We do a lot with financial literacy in the community. We have many of our team members go out and they present at different organizations and talk about how to build credit, how to manage credit, the do's and don'ts, and how to avoid situations to where you would end up where your car is getting repossessed or your home's going into foreclosure. Really those basic skills that we really want young people to learn before they start going out and actually borrowing money. We try to do that at an early age, so that way they're getting that and they're building up those skills as they get older, and then we can be their partner along the way when it's time for them to take out an auto loan or get a credit card or that next step with buying a home.
Okay. So if I were interested in something like that and call up and say, hey, do you guys have financial education? You could refer me someplace right now.
Yeah, we will work with, we have organizations that will call us and ask us to come in and present to their employees and do financial seminars. We have a whole team that's dedicated to doing that. So we will on occasion host our own webinars, and we'll invite the community to attend. So yeah, we have tons of different options for people who are looking for avenues for providing financial literacy to the community.
Yeah, those are so helpful. We have first-time homebuyer classes at Community Legal Services, and we have credit counseling, and you hear those radio ads like, call us now, we'll help you get out of your credit stuff, but not all of those programs are the same, right? And so.
And a big thing, when we talk about home ownership is, I think the average person thinks about, can I afford this monthly mortgage payment? But they're not always thinking about, what about when my air conditioner breaks, or if I need to get a new roof, or something catastrophic like that happens, which could set you back thousands and thousands of dollars. So making sure that when they're going into that new era of now I'm going to be a homeowner, do they understand a lot more comes with that than just the monthly mortgage payment? So, and you have to be prepared for those things.
That brings up something else too, is you see, and I ran into that same issue recently. We had an inspection done on some stuff, and it was 5 things, each a couple $1,000s piece. And so I know that there's a big issue right now with what they call, they say affordable housing, and people are 40, 50% of their monthly income goes to that. How are you all addressing some of those issues?
So we are really working with borrowers, one, on trying to make sure that when they're ready to start looking towards home ownership, that they're actually starting to save, because the more money that you can put down, the easier it's going to be when it comes to managing a payment. And to your point, first-time home buyers, I can think back to 20 years ago when I was a processor, and a first-time home buyer in Central Florida could buy a home for $125,000. It was a great first-time home for a young family. Mm-hmm. That number today is more like $300,000. And, the average $50,000 a year salary, that's challenging to get to that $300,000 mark. So one, we do a lot of education around, saving for a down payment. The more money you can put down, the more affordable your monthly payment's going to be going forward. So planning early and starting early towards those savings. Also, we talk with them about trying to start putting away what, if you think you're going to be qualified for a $2,000 a month payment, start putting that money aside to show yourself that you actually can handle a payment of that size. The other thing is we offer different programs for lower down payments. You may have a slightly higher interest rate, but we'll offer you to get into the home for less of a down payment than your traditional like 20% that you normally put down without PMI. So it's really just finding the right program for the borrower and then coaching them along the way so that they can get to that desired home that they want to get.
So as we close out, is there anything else you would like our viewers to know?
Yeah, I think I would really just like them to know that Addition Financial is really here to be a partner. We look at our members as having a relationship with them, and we want them to have a relationship with us. We don't want to just be your credit union or your bank. We want to actually be your partner through all the different stages of life. And not only for our existing members, but also for the community, which could include future members as well.
Well, Miriam, thank you so much for joining us today on Law Talk.
Thank you so much for having me.
It was great to have you here.
Yeah, thanks.
What a great conversation we had today with Miriam Mitchell from Addition Financial. It's really comforting to know that there are institutions out there that are really looking out for your best interest and want you to succeed and have tools and resources to help you do that. And if you or someone else you know is in need of legal assistance, please reach out to Community Legal Services at legalaccessforall.org. To learn more about today's topic and watch other Law Talk episodes, visit WFTV.com/legal or watch Litigation Corner every weekend on TV 27. Till next time, thanks for watching WFTV's Law Talk.
WFTV's Law Talk is sponsored by Community Legal Services.